What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock, what you should be looking after for the future. I'm also going to break down why tomorrow is going to be a very important day for the stock market because we do have the notorious debt ceiling limits being reached. We have some big earnings, we have some important pieces of data coming out, and also some big Fed announcements that are going to be very, very important. So I'm going to break down why the heck the market did push up in the beginning of the day, then get this big sell-off after the Fed said some things. I'm going to break down what I expect for tomorrow for NIO and the markets, and what you should be watching for that's very, very important. Now, before I break anything down, before I give you guys any price predictions and talk about what on earth is going on with the NIO stock and the overall market, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any could be a free AMC share, a free Tesla share, and a link, and a mix of any of them. So anyways, getting on with the video, what's happening to NIO? NIO is down 3%. NIO did push up in the very beginning of the day like this. It wanted to go for this gap fill, but it failed around this 11.68-ish level. And then it ended up coming down because of the big news that came out. Let me break down what the markets did because SPY was very similar. So was the NASDAQ. Nice push up into open, followed by a big dump as the day went on. Why did this happen? To start us off, we had earnings that came out and also some economic data. This was actually what helped the market push up in the very beginning. The PPI report came out. This is one of the major inflationary measures, and it isn't as talked about as CPI, but it is still important. And we actually saw inflation cool down from the producer's side. We saw it at about 5.5% year over year, and it also ended up being down by 0.5% month over month. So this was an improvement to inflation. The market likes that. On top of that, we had earnings. Earnings came out and they were pretty mixed, not so good actually. For Wednesday, we had Charles Schwab missing a little bit on earnings per share. It was just barely a miss. It was okay, but they did do okay on revenue. We saw other companies miss a bit, but then PNC also missed on EPS by some margin. They're obviously not such a absolutely giant sized bank, but they are still kind of signifying that this earnings cycle is not looking as strong. Then they beat on revenue though, but we did see some misses, guys. So not the best of things. So off this news alone, the market still managed to pump up a bit. NIO pumped up. It went to about 11.68. It wanted to start filling the gap, but then all of a sudden, the market dumped. And that was right after the Fed speakers came out and they started saying, oh, we have so many more rate hikes to come. And what's interesting is SPY was at 400 exactly, and that's just so happens to be the exact time they start saying these things, right? So anyways, they start talking about how there are going to be so many more rate hikes in 2023. They started talking about the fact that they have to be more hawkish. There's more work that has to be done. The market starts pricing in a quarter point of a rate hike for February when the FOMC meeting starts on February 1st. And also Bullard, it was both Mester and Bullard that spoke. He mentioned the fact that a half point is still very possible. There's a lot that has to be done. They have to keep on raising rates at a rapid rate, and they can't become complacent because this is not an easy manner. This is something that's going to take quite a while, and inflation is still very high. So off this, the market starts dumping. The market starts dumping pretty hard. It's been a while since we actually heard the Fed actually reinstate where they are on policy. So for tomorrow, what do you have to remember? There are, let me think, basically four things. Number one, do not forget the Fed's words. And we also have Fed speakers tomorrow as the day goes on. Okay, so we're going to have Brainerd speaking tomorrow. And she is notorious for being not as hawkish, but I do believe she might say things that the market may not want to hear. So you have to be very careful. The first thing is the Fed speakers. Okay, it's going to be very important because when they talk, the market could come down pretty hard. You saw that today. The second thing is we have economic data before the market opens. That's going to be the initial jobless claims data. If this number is higher than expected, the market could pump. We want more people filing for those jobless claims. We want more of that. We want more pain in the employment sector. But if this number is lower than expected, lower than the consensus, that's like right here, then we could actually see something that's, the market doesn't like. And if it's lower, then the market could actually take a bit of a hit. So be very careful with jobless claims data. On top of that, so remember, the first thing is the Fed. The second thing is going to be jobless claims data that's coming out before the market opens. The third thing would be earnings. This is actually a big one. We have some banks reporting earnings, which I don't think is going to be as big as the last couple of days in the morning. But then in the afternoon, we have the big dogs. We have Netflix finally reporting its earnings. And this may be a reflection of what we're about to see from other communications and tech companies out there. This is going to be super important. So do not forget about Netflix. They have earnings tomorrow and other banks as well in the very beginning. Once again, not as significant as earlier, but this is still very important. So once again, the Fed is the first thing to remember. The second thing is going to be the very important jobless claims numbers. The third thing to remember is going to be earnings. And the fourth and final thing that's actually pretty important is going to be the debt ceiling limit being reached. What's going to happen is in a divided Congress in America, we have the House controlled by one party, the Senate is controlled by a different party. They're going to be arguing and negotiating. Now, I do know that they keep raising the debt limit like all the time. However, this is different because there's no guarantee they're going to raise it immediately. It usually takes a while. And during this long while, there's going to be a lot of talks about the recession. They're going to talk about to what degree they want to do it. And I do believe that the Senate is going to urge, and not just the Senate, I mean, the right is going to urge the government to actually reduce their spending in order for them to raise the debt ceiling. And that's where it's going to lead to some crazy negotiations. And as the negotiations go on, the media is going to eat this up. You're already seeing it. Look at this headline: 4 ways around a debt ceiling crisis. They're already calling it a debt ceiling crisis. It's a crisis. It's getting worse. It's bad for the economy. And people may even start to panic over this. I believe this could cause at least some stress in the credit markets. Will it be like as extreme as 2011? I don't know, probably not, but it could be significant. And this could be negative for the stock market going into the next couple of weeks, as the media is going to talk about, oh, the US has all this debt and it's going to start trending and people are going to just go nuts over this. You're going to see this everywhere. Not the best for the stock market. I'm telling you right now. So we have so much stuff coming out for tomorrow. The majority of these things could lead to lots of volatility. I'm going to show you what type of volatility I see, but now let's talk about NIO. NIO had some pretty average volume at 43 million. There was some news, I believe, by Cathie Wood. She did actually sell a part of her NIO stake, and she has been actually buying into Tesla. And then finally, going down, NIO has had an improved price pairs ratio, but it's starting to come down. NIO is starting to underperform again, so not the best of signs. So I'm saying all of this because amidst everything that's going on, SPY has this gap. It looks to me like, see where the purple line is? We're so close to it. We're, in my opinion, going to fill the gap into open tomorrow. I think it's going to come all the way down, and we need to see if SPY could bounce off 390. If it could bounce off 390, we might get a small push up all the way back to the 50 EMA. Maybe, maybe not. I'm hoping that that's what we end up seeing. I also want to note that the 200 EMA is very close on the hourly to this 390 level. So maybe around 390 we bounce temporarily before we start to slow down because of the Fed. Or we could break below 390 and start selling off even worse. That's also a possibility to this like 388 level. I don't know how much we're going to sell off, if we're just going to fill the gap and bounce, or if we come a little lower to this 388 level. But either way, I do think we're going to drop a little into open, then get a bit of a bounce. But if we gap up tomorrow like this, not the best of signs, because then we'd have a gap below, another gap right here unfilled, and then more space to come down. Now, I do believe the market will try to rebound tomorrow a little bit, but it might get eaten up by the Fed or the debt crisis data and news articles and stuff like that. And who knows how Netflix earnings ends up being. It may be pretty decent, or what if they miss big time? If they miss big time, man, SPY could start to drop a bit. So could Netflix, so could other big stocks. Netflix is still a huge company. It still is worth over $100 billion in terms of market cap. It's a massive company. It will affect how the market moves and the outlook of investors. So that's why tomorrow is a very important day. What do I see for NIO? Well, I was right about NIO trying to push up, but then the negative catalyst, which was the Fed, ended up dragging us down. When it comes to the market, I believe that, okay, maybe we could get a bounce around this level, but I don't see us coming back to like 400. The descending broadening wedge is already like pretty far. We might try to get a bounce retest and maybe trade kind of sideways, but other than that, it looks a lot more bearish. And the bearish trend is most likely going to perpetuate, in my opinion. I don't think we're going to dump immediately. I think it's very likely we're going to chop around quite a bit before we end up seeing a really, really big dump, and the market ends up coming down later, maybe as we approach like February. So we could see the market come down, trade a little sideways for some time, maybe downtrend a bit, and then really start to dump once we get into February. That's what I'm essentially seeing. And I do believe the market's topping and getting ready for the next bear rally as we approach February. Now, I was talking about this for a while. I was telling you this for a very long time about how I anticipate a reversal. My target was 398 to 402 on SPY. I did increase it to about 402 to 406 if we broke past 400. We failed at 400, which was actually in the middle of my initial target. So now it looks like we're going to remain bearish. I do think we're going to chop around first before we become super, super bearish. And I do believe more downside is yet to come. I also want to note that for NIO and the NIO investors out there, NIO is likely going to come down in the future and start filling lots of these gaps to the downside. It is going to likely come down to these levels in the future over the next month. I see that happening. For tomorrow specifically, NIO has a critical level, 10.8. We need to hold 10.8. If we fail at 10.8, we are most likely going to crash to the low 10s to fill the gap. It really is that simple. If you see NIO break below 10.8, very soon this thing will likely start to fill these gaps down and hit the lower 10s. But if NIO gets a big bounce and we break past 11.33, 11.6, we can fill this gap and get closer to 12. I just don't really see that happening. I think tomorrow into open, NIO is going to drop. It's about 10.8, get a bounce, push back to 11.3, trade kind of sideways, and slowly end up closing very close to 10.8. If NIO breaks below 10.8, like I said, that was previous support that was very significant, also resistance. Then we have the potential to come down to fill this gap, and the low 10s could come. This could happen over the next couple of days. This is starting to kind of curl. So maybe NIO slowly kind of breaks down and slowly starts downtrending. Still is very, very possible, unfortunately. All right, so please watch that level very carefully and be ready. Tomorrow is a very, very important day. Thank you all for listening. Have a great rest of the day. Remain calm, cool, and collected, and I'll see you guys in the next one. NIO to the moon, because the long-term future is still very bright despite the very short-term potential downside. And peace out.